All right, what's going on, everybody? It is Friday, September 24th. There's a quote from one of my most admired economists, John Maynard Keynes. And he was asked one time by somebody, hey, you changed your view on something. And to which Keynes replied, when the facts change, I change my mind. What do you do, sir? So yesterday I was talking about the action taken by the Fed on Wednesday, and it was kind of like a blurb at the end. They had their statement, and I went over that where I thought the statement basically said no taper, and then Powell's words in his press conference that they're going to do the taper. But the thing, and I talked about this on my video yesterday, they increased the counterparty limits to the reverse repos, okay? Originally, it was 80 billion per counterparty per day. They doubled that to 160 billion. And I talked about this yesterday. I said, that hit me at the time, but I kind of, just glossed over it. I was thinking to myself just very briefly, something that could be bullish because that's a reserve drain. And then I just, for whatever reason, I chose to ignore it. And then yesterday on my video, I said, I think that's short-term bullish, and that kind of overrides the fiscal situation right now, which, by the way, the fiscal situation, it still looks pretty good. I mean, I'm not really seeing much deceleration at all. So when the facts change, I change my mind. What do you do, sir? I know I'm going to take some heat from this, but I sent out an email today to my subscribers saying we have to cut or exit all our defensive short positions and go long because the market's going back up based on this new development by the Fed, the doubling of the counterparty limits on the reverse repo. That's all I want to say about that. I want to talk about something more fundamental, I should say, more as kind of a discussion thing. I am a big believer in consistency. I believe that if you're going to make an argument, it has to be consistent across all scenarios. Otherwise, your argument is very specious. It could be bogus, all right? And what I'm talking about is, we have heard for months and months and months, for all of this year, we have heard from people how the Fed's quantitative easing is causing inflation and hyperinflation. And people really outraged by this, and they're saying, they got to stop this, they got to stop the QE, they got to stop the asset purchases, they got to taper. They've been screaming about taper because they're saying, the Fed's buying all these assets and it's printing money, they're printing money. And it's creating inflation, and you've had everybody from the quacks and the goofball idiots all the way up to, kind of respectable economists and people on Wall Street. Not, I put that in air quotes, all right? Okay, fine, if that's your argument, and my position has been that this is not inflationary, it's an asset swap. It's exchanging one form of a dollar, which is a reserve balance in the banking system, for another form of a dollar, which is a government security, a treasury, which is a dollar equivalent. And plus, it's stripping out the income that would have gone into the economy by holders of those treasury securities. The income instead, it goes to the Fed, so it never gets into the economy, and it goes back to the Treasury at the end of the year. So it's taken away income. I don't see how when you remove income that's inflationary. Anyway, that's my view, which I think is the correct view. And then there's everybody else who's pounding the table and going crazy and saying it's inflationary, the Fed has got to stop. But here's the rub. Here's what gets me. you have to be consistent. And the reason I say this is because we don't hear anything from these people about ECB, European Central Bank asset purchases. By the way, the European Central Bank balance sheet, its assets at 8.3 trillion euro is bigger than the Fed's balance sheet, okay? And they're continuing to buy assets. Nobody's pointing a finger over at Europe saying they're going to have hyperinflation. We don't hear anything. And hey, what about the Bank of Japan, which has 7.3 quadrillion yen on its balance sheet? 7.3 quadrillion yen on its balance sheet. Nobody's looking at them. And by the way, you know, Bank of Japan, every month at their meeting, they're like, hey, how are we going to raise the inflation rate? Maybe you stop, you know, buying all these assets. That might do it. So this is where I have a problem. I cannot accept all this, you know, attacking of the Fed. Look, it's not like I'm here trying to defend the Fed. What I'm doing here is saying, if you're going to make an argument, you have to be consistent in that argument across all scenarios. So if all these people are going to be screaming about the Fed, and some of you too, you know, they're making inflation, everything's going up, hyperinflation, you know, they're printing money. Then you got to make the same argument about the ECB and the Bank of Japan, where there is little, if any, evidence of inflation over there. I mean, that's just logic. You cannot have an argument that applies in one circumstance and then the exact same argument having the reverse outcome somewhere else. That is just absolute proof that the argument is bogus, that it holds no water whatsoever. Okay? That it's a phony argument, it is a fake argument, and it's contrived from just to rationalize a viewpoint or an opinion. That's called dogma. That is stating an opinion as if it is fact. Now, people going around, you know, and the worst part about this is, I have to say that the worst part about this is that the Fed listens to these opinions and forms policy on the basis of this. Now, we saw this again back in 2018 when the market was going through a normal correction. It was at the end of 2018, and Powell panicked at that time, and he said, you know, he switched policy. He switched course on monetary policy. He stopped raising interest rates. He started to cut interest rates. But what triggered that was this huge outcry about a normal correction in the market. The Fed's got to do something. They're jacking up rates too high. Again, rates are really irrelevant. I mean, if you look at the history of stock prices, of stock averages, there were periods in time when rates went up. There were periods in time when rates went down. The market goes up over time as long as there are growth policies underlying the economy. And that is really a fiscal discussion. That's a fiscal situation. So you have to be consistent. If you're going to sit here and scream and cry and whine about how the Fed is printing money and they're causing, you know, prices to go up and inflation, then you have to be saying that about the ECB. You have to be saying that about Japan. But the problem is, in both of those examples, you will not find price pressures. So the argument is bogus. The argument is empty. The argument is wrong. But again, I'm going to say that the worst part about this is the Fed listens to these opinions and takes them as valid. And that's bad, because you can't, you know, enact policy. You can't fashion policy based on just crazy opinion that is not factual, that is not reality. But that's what's going on. Anyway, that's my beef for today. It's Friday. Go out, enjoy, have a glass of wine, whatever. See you guys over the weekend. Take care. Bye-bye.